Business income or business interruption insurance can be a confusing insurance coverage for manufacturers. Small manufacturing companies often are insured on a business owner's or BOP type policy, which offers business income coverage on what's called an actual loss sustained basis for up to 12 months, meaning that if the company suffers a loss that causes them to cease operations fully or partially, like a bad fire, then the policy will pay the actual monthly expenses and profits lost during the shutdown period for up to 12 months. That's easy peasy, so to speak. But there's also some downside to this ease, which I'll discuss in a moment. For larger firms, policies often require what's known as a stated limit of coverage, and this is where it gets sticky, not just for clients, but also for their agents. Hi, I'm Gordon Coyle. Welcome back to my channel, where we talk about the risk and insurance issues on the minds of business owners. And today we're going to dive into business interruption insurance issues for manufacturers. Okay, so why does the situation get sticky or difficult when business interruption is written on a stated limit? The answer is because so few brokers know how to complete a business income worksheet, which is the starting point for getting this coverage right. I'll admit that the standard ISO worksheet is complex, and I've had plenty of CFOs tell me it's an effed up way to calculate the exposure. So let me simplify it a bit. Business income or business interruption insurance is intended to pay for a firm's ongoing business expenses and lost profits while it is fully or partially out of business due to a covered loss. There are three important elements to this that must be met in order for coverage to be triggered. The first thing is that there must be a full or partial cessation of business operations. The second thing is that the cessation must be caused by a covered peril or cause of loss. And three, there must be physical damage or loss to the insured premises. There are extensions for loss or damage to nearby premises, and there are some extensions for government actions like street closures nearby. But again, these extensions are pretty limited. During the pandemic, many businesses filed claims under business income because they had to shut down for an extended period of time. Those claims were mostly denied because they failed to meet conditions 2 and 3. In fact, many policies exclude claims from viruses and other biological contaminations. Now, back to how you calculate what type of limit you need to insure for. The basic premise here, as I mentioned earlier, is to cover all of your ongoing expenses when you're faced with a shutdown. Rent and other occupancy costs, payroll, which I'll detail in a minute, equipment leases, loan payments, insurance, legal and accounting, and so forth, are all examples of ongoing expenses. Raw materials, packaging, freight, transportation costs are example of items that likely will not continue should a shutdown occur. Let's get back to payroll for a moment. This is an area where I see the calculation go sideways. You can exclude a portion of your payroll. That exclusion can be by the classification of workers and after a certain time limit. For example, a manufacturing plant may not need to keep line workers or what is known as ordinary payroll on the payroll following a covered event after 30 days, 60 days, or 90 days. If there's a small fire that triggers a shutdown that can be remediated in, say, 2 months, then it makes sense to have your insurance reimburse you for those idled workers during the recovery period, so you don't have to lose all of them and then rehire all of them. But it may not be economically feasible to keep those workers on payroll past, say, 120 days. So you should endorse your business income coverage to reflect that exclusion of expenses past 120 days. You likely do want to keep your managers and higher level workers on payroll to the completion of the claim. These issues need to be considered when formulating your business income limits, so you're not overpaying for coverage you don't intend to use, as well as not understating the limit that you will need to recover. Profit. The business income calculation should also include lost profits you should be recovering while out of commission. Now that you have a sense of what's in and what's out, let's boil that down to a monthly number, because the next thing to consider is how long will a cessation last? How long will it take to recover? Again, this is where I see many policies get it wrong and underestimate the duration of a claim. You want to think of these as worst case scenarios. Underestimating the duration of a claim can be devastating. Think for a moment what would happen if your plant burned to the ground And please don't think it can't happen. Even superior constructed buildings can go down. How long would the permitting process take alone? How long would it take to find and deploy the right architect and general contractor? How long would it take to source all the building materials and the specialized machinery and then get it built, ready, all the equipment tested and operational? Once you figure out the ultimate worst case scenario, time-wise in months, you now have your two critical factors down: the monthly nut you need to cover and the number of months you need to cover it for. This is your ultimate limit of insurance, unless there's a ramp-up time for fully recovering your operations and cash flow. For example, it may take 6 months or more to bring all your customers back and buying your products, so that needs to be built into the formula as something known as extended period of recovery or indemnity. Earlier, I mentioned that smaller manufacturing firms that qualify for a BOP policy get business income coverage automatically for 12 months on an actual loss sustained basis without having to go through this calculation as easy. But there is a catch, which may be evident in my comments a minute ago. Recovery may take more than 12 months. Then what? Unfortunately, this is a shortfall of a business owner's or BOP policy. Easy is good, but it may not be perfect, and this is a consideration a skilled broker needs to evaluate where a BOP is the right solution for a smaller manufacturer. Here are some other considerations. The secondary part of calculating business income insurance is also calculating something called extra expense. And there's another page to the worksheet that covers this time element insurance. Briefly, extra expense are those costs you incur to expedite the recovery process. I could probably make an entire video here, but in the interest of time, suffice it to say that careful consideration needs to be given to extra expense. The good news is that when you've gone through this once, it probably only needs to be briefly updated each renewal. Other issues are coinsurance, potential contingent business interruption issues, civil authority sublimits, and extensions for excluded perils like flood and earthquake. I realize this is a lot to take in, but I hope this video gives you a good overview of the issues at hand with business interruption for manufacturers. The overall goal here is to illustrate that while it's complex, it's not impossible to figure out, and this is where the role of a skilled broker can shine to help you get the right limit of coverage to protect your business and provide you peace of mind if disaster strikes, that you can recover. If you're looking for that high level of expertise to protect your manufacturing business, then give me a call. My contact info is in the description box below, and I'd love to hear from you. Thanks for watching.